Okay, welcome to today's show. Is MSTR too big to fail? Are they over leveraged? There's all kinds of stuff going on in the marketplace. I'm going to jump in and start off right now. I'm also going to get into this and break down strategies, strength, their financial products that they have, and how I view the company overall by getting back to the roots of what this company actually is and what their purpose is. And then I'm going to show you where Bitcoin stands. Is Bitcoin overheated? What range is it in right now? We'll look at some charts on that. And then at the end, we're going to look at MSTR, a little bit of technical analysis, because we know that on Friday it dropped and people are flipping out a little bit. So I'm going to walk you through at the end, just the basic technical analysis conceptually of where MSTR is right now. All right. So we're going to jump back in right now and get started. Not financial advice, not tax advice, not legal advice. Do your own research on this stock and anything else that I talk about on this show. Okay, so let's jump in. First and foremost, let's just look at Bitcoin, then we'll get into MSTR. All right. So the first thing we're looking at here is this is a great chart from Bitcoin Magazine Pro. If you look at this chart here, the simplicity of it is if you look at the line, the black line up here, that's the market value. Okay, so that's currently what the value of Bitcoin is in the market. And then if you look at the blue line down below it, that's the realized value, which is where people have bought Bitcoin at. All right. The main thing that I want to point your attention to is just this yellow line down below. Okay. And if you look at the range that indicates whether Bitcoin is overheated or overbought, it's between the 0 and 10 range. And so we're at like a 2.4 or something like this right now. If we go to the charts and look at this, the range here is like 2.69 or something at the close of the market on Friday, approximately 2.7, something like that. Okay. So when Bitcoin gets into this range of 7 up here, as you see this other yellow line and you see the spikes on it, if you go to the left here, you look at this other yellow line. This was back in 2000. If you go back and look at 2021, around that range, you'll see the spike above 7 during the last bull run. That's when it gets overheated. We're right in the 2.7 range. So if I were looking to take profits on Bitcoin at some point in the future, or looking at the market, I would be looking at this score, which is called the Z score, that tells you is Bitcoin overheated. And if you look at the previous bull cycles in 2021, and then you go back and you look in 2017, 2018, you look at these yellow lines that spike up. And when they spike up above 7, that's the indicator that Bitcoin is overheated. And if you look at every previous bull cycle here, you'll see the spike of the yellow line back in 2014-ish, back in 2017, 2018, and back in 2021-ish here. You'll see the yellow line spikes above 7. And so the indicator right now for where we're at on Bitcoin is we're not even close. So it does not appear that we're overheated. We're at a 2.7. 7 would be an indicator of being overheated. So if you look at this chart up here and you look at this kind of pinkish, reddish zone up here, that whole area, that's 7 to 10. That's where Bitcoin's overheated. So it's kind of a stable datum. If you look at like, how are you going to kind of stably operate in the marketplace and make decisions? For me, I first look at Bitcoin, and because Bitcoin is obviously the underlying asset for strategy. And I look at where they're at. Of course, I own Bitcoin as well. And I look at this 2.7 range. It's like we got a ways to go. What that will mean, there's some analysts calling for Bitcoin over 200,000. Some people are calling higher. Some people are calling lower. We'll see, right? But I don't think at all 112,000, which has been the high so far, is the peak. And per this chart, it's not. All right. Who knows what's going to happen in the future? Don't have a crystal ball, but the best we can do is just look at data we have at our fingertips and try and make the best decision possible. So that's what's going on with Bitcoin. Make sense? Saying hello to everybody in the chat. What's going on, Pedro? What's happening, Jeff? What's up, TC? Yeah. So I hear you on that. We got Pedro from Portugal. Love it. So that's what's happening with Bitcoin. So let's jump in and let's take a look at strategy. And what I'd like to do before I get it to the end to take a look at strategy being closing around 369. If you looked at after hours, it was down as low as 366. We're going to look at strategy at the end, and we're going to take a look at kind of where they are. Are they still in a bullish pattern or not? And I'm going to walk you through that at the end with some very simple data. But what I'd like to do is back up, because when times like this happen, and we all know that strategy is not moving in the direction of Bitcoin right now. And when things like this happen, it can be nerve-wracking for any of us. And I think the stronger your knowledge is in an area, and the stronger you understand the company and what they're doing, and the stronger you understand the leadership behind the company, and the stronger you understand some data points behind the company, the more one's knowledge goes up, which means the more one's responsibility can go up to make sure that they're making the right decisions for themselves, right? You got to make your own decision. I'll make my own decision. But in times like this, I like to back up and go, what is strategy really? What the heck are they actually doing? And like, let's back up and look at this stock and look at the genius of this company. So what I'd like to do now, we're going to get into leverage and concepts like that in a minute, but I want to look at strategy's playbook and just do an overview of things I've been talking about on this show for the last 4 or 5 months, and things that I've been studying for the last 4 or 5 years in terms of strategy. And so this is the most brilliant financial move ever. That's what I believe. Okay. And I'm going to walk you through why it is. And perhaps in times where we get shaky, one can get the knowledge and the data and go, what are they really doing? And what's the genius behind what Saylor's actually doing? And so if you look at this, we're in the face of a financial revolution right now. This is like traditional finance merging with the world of Bitcoin that's upcoming. We got governments aping in. We got, BlackRock, Larry Fink, who was like poo-pooing, Bitcoin years ago. And now all of a sudden he's all in on Bitcoin. We've got so many different corporations aping into Bitcoin. Like, this is the future. And strategy was first to the table. And let's not forget that strategy led the revolution, guys. Before the ETFs ever came out, before Larry Fink and BlackRock were ever on board, like, strategy was the behemoth in the marketplace that decided we're going to go in and lead this revolution. And let's not forget, too, that when the crash happened in 2021, at the end, 2022, strategy held their Bitcoin. And they went down to the lowest points of, Bitcoin going down to $15,000, peaking at $69,000, going down to $15,000. And they held their freaking Bitcoin through tough times. And they didn't get liquidated, and they didn't have to sell their Bitcoin. And now, if you look 5 years later, that's back in 2021-ish, when they first started buying Bitcoin in 2020. If you look at 5 years later now, they're stronger. They're bigger than ever. They own 2.7% of the supply. They own more than anybody on the face of the planet. Okay, BlackRock's in the race too. So BlackRock might be a little bit bigger in terms of what they own, but they own 2.7% of the supply. Make sense? So this is a massive, massive, massive company. And the question is, are they too big to fail? And I think they are too big to fail. Now, it doesn't mean you're not going to have price fluctuations. It doesn't mean they're not going to be volatile. I mean, strategy stock is volatile as hell. And when we see it go down on Friday to 366, people are like, what's going on? So let's get back to the basics of what this company is. First, you got to look at the leadership. Who is Michael Saylor? Would you rather have anybody at the helm behind this company right now than Michael Saylor? And the answer is no. I mean, this guy is more convicted than anybody I've seen on pretty much anything. I mean, he is so convicted on Bitcoin. He is so focused on Bitcoin. This is a company that buys Bitcoin, period. All right. And if you take back, he's a smart guy, MIT graduate, engineer, entrepreneur. He founded MicroStrategy, which is now Strategy, back in 1989. This guy was a billionaire once before. They had remember the dot-com bubble that happened, and then the crash, and his stock went all the way freaking down to the bottom. And then he built his company back up. And he built a software company, and he made his software company really successful. But we do know what happened in 2020. And let's not forget what we're dealing with here. Because anytime one's in doubt, it's important to look back to the fundamentals of the move that this guy made. And, it's not hype. It's not luck what he's doing. He's basing his decisions on math, on logic, on vision. And in 2020, we know that the world changed. The U.S. printed trillions of dollars out of thin air. We all saw it. We lived through it in COVID. And Saylor looked at his company that was $500 million in cash reserves, and he saw it melting. And the idea was just from inflation alone, you take a 3% inflation. He said, if we sit on cash, we'll lose $15 million a year to inflation. But the bigger story than this really is that, there's statistical data out there from proven sources that show that over the last 100 years, the U.S. has printed 6.5% more money every year for the last 100 years. So you're not really dealing with a company that was looking at $500 million in cash reserves and just worried about inflation. Inflation on average might be 2-3%, so they say, based on the basket of goods and services that are put in there. But he was looking at the real world inflation of sitting on $500 million and sitting on a melting iceberg. He was like, it's not really 3%. And if you look at the debasement of money, you lose 6.5% of the value of your dollar every single year because of money printing. And at the time in 2020, it wasn't even 6.5% because inflation was even higher because the money printing was crazy. We printed, I think in 2021, 2022, fact checker, 2020, 2021, we printed 20% of all the money that's ever been in supply. That's a ridiculous amount of money printing. You see, so he was sitting on this melting iceberg and he had to make a decision. So he did. And he paved the way for many institutions and many governments because of his vision. Let's not forget, there's a whole community of Bitcoiners and people that kept putting it there, and they deserve the credit. But you had a man with the loudest voice on the face of the planet that kept putting it there. And don't think that governments didn't fall in line. Don't think that other corporations didn't fall in line because of this man's voice, period. And this man's conviction. So I trust and believe that he's going to continue to put it there and continue to do what he says and continue to flourish. And they're bigger than they've ever been. 2.7% of the supply of Bitcoin. 2.7%. This company is growing. They're not going to stop buying Bitcoin. They have an $84 billion plan now. Initially, it was a $42 billion plan. They adjusted it, and now it's an $84 billion plan to continue to buy Bitcoin. And they have a suite of financial products that I'm going to go through today and explain those financial products one by one to see how big and badass this freaking company is and how badass the leader is. And that's the fundamental understanding that we go back to because it's the most basic things that fall out. If you look at a company, when the company stops doing the basic things it's supposed to do, the statistics in the company go down. When you look at investing from my viewpoint, if you understand the basics and the root of the company and the decision of why I'm in strategy is because of this. And this is where I get my conviction by looking at what it actually is versus the fear week to week or 2 weeks or 3 weeks or a month of what's happening. So we look at this and we go, wow, what a freaking leader. This guy's unbelievable. So he did something about it. He put 250 million into Bitcoin, then 175 million more. Then he put his own money in back in 2020 of another 175 million. And he kept buying and buying and buying. And if you look at his quotes over time, he says, volatility is vitality. That's what he says. Buy Bitcoin. Buy as much as you can. Buy it and hold it forever. That's Saylor's philosophy. There is no second best. And traditional finance laughed at this guy for years. Let's not forget where we came from. Traditional finance laughed at him. Warren Buffett mocked him. Charlie Munger called Bitcoin rat poison. Bill Gates mocked him. Okay? Peter Schiff, the gold bug, continues to mock him. They said it would never work. And look at what he's created. So in a down week or 2 weeks where strategy goes from 410 to 366, okay. Let's not forget about the fundamentals of this freaking vision, of this leader, of this stock, of this company. From 2020 to 2025, strategy has outperformed every major asset on the face of the planet, including NVIDIA, guys. This isn't a stock story. It's a revolution in finance. People will look back 100 years from now and look at the day the world changed. Yes, it changed when Bitcoin came into fruition, but the day finance, the world of finance changed when this man made a decision to go all in and people followed. So let's jump in and let's talk about what is leverage at the most basic fundamental aspect of this. I'll skip forward here and go, look, what's leverage? And then we're going to get into how strategy deploys leverage. But this is just a fundamental idea where many people don't understand what strategy is doing and they go, they're too leveraged. They're too leveraged. Strategy is not too leveraged. If you look at their balance sheet and you look at how much leverage they have and you look at how much debt they have on the balance sheet, they're not too leveraged at all. I mean, Bitcoin would have to go down to like $9,000 or $10,000 for you to be concerned about strategy. Do you ever think we're going back to a $9,000 or $10,000 Bitcoin? Do you really? No. In fact, the majority of people, if you look at the support level for Bitcoin right now, there is a strong support level for Bitcoin at $94,000. I don't think we're ever going back to a $10,000 Bitcoin. Do I think that you have anything to worry with the long-term viability of strategy? Is there always a risk? I don't think there's a long-term major risk with this company. There's always a risk in anything, and you got to look at it and be smart. But I don't think there's any long-term major risk with this company in terms of strategy's viability. Now, is there a risk in the stock? Yeah, it goes up, it goes down. I mean, you got to know what you're doing with this, and you got to have conviction in this, And so you got to look at this from a longer-term time horizon, depending on when you got in. I got back in this stock in 2024, early 2024. My first buy into strategy was at $79. And if you go back to 2020, when I bought into strategy initially and then sold out some of it, it was way lower than that. Okay. But I do have some buys into the stock when it was down at 330 recently over the last couple months. So I do have some positions there. But you got to look at, if I'm doing this brand new, I'm looking at when did I buy into this thing? And then I'm determining my time horizon on it. Make sense? So we're going to the fundamentals. What the heck is leverage? Let's put it at a 5th grade level, because everything on the show, I do at a 5th grade level. Okay. So leverage, we got to understand leverage to understand strategy. Let's say you want to buy something that's worth $10, right? But it's worth $100, but you only have $10. You're like, wow, I want the $100 thing, but I only got $10. You borrow 90, right? So you borrow 90. Now you control a $100 asset, but with only $10 of your money. That's leverage, right? If the asset goes up, you win big. If the asset goes down, you lose faster too. Leverage amplifies outcomes in the right direction or the wrong direction. The right direction most of the time is up if you're betting for the stock to go up. The wrong direction is down. But it's also, leverage is how real estate investors build portfolios. So this is not a new concept. People will come in and go, oh my God, they're leveraging. No, strategy is a Ponzi scheme. No, jackass, it's not a Ponzi scheme, all right? Leverage has been used for hundreds of years. Hundreds of years. It's a traditional financial tool that's been used. You look at real estate property. Somebody uses leverage to buy a property. The property goes up. They take out some of the money. They buy another property. It's leverage. Intelligent companies like strategy use leverage. I use leverage to buy Bitcoin. So, I didn't get it at a 0% interest rate like strategy, but I got it at a low interest rate. And I've made out from that decision over the years when I did that back in 2020. So it's leverage that is a power play. Now, one should not leverage themselves to lose their house or lose their savings or do stupid things. Of course, one needs to make their own decision on it. But strategy, the way they're using leverage, is intelligent. And I don't think you can make the comparison and sit here and go, well, I'm going to do the exact leverage play that strategy is, because I'm not a corporation. I'm an individual. Make sense? Now, I run companies, and I have my companies backed by Bitcoin reserves. I also have my own Bitcoin reserves personally, in terms of just Bitcoin holding as an asset. So I understand what I'm doing, but I'm no strategy. I'm not even close to the size of a strategy. And I'm an individual. So I have to look at it through the lens, understand the data of what they're doing. And if I'm a stock owner like I am a strategy, am I making the right decision? So strategy isn't just a Bitcoin play. It's not. It's been called a fusion reactor, combining the old financial world, which is Wall Street tools. When you look at it, you look at the public equity markets, stocks and stuff, and you look at bonds. Bonds is just a fancy way to say loans, right? You loan me some money, loan me some money, and I'm going to do something with it, right? You loan me some money, I'll give you an interest rate. Tracking? Okay. So that's how it goes. Bonds is like, loan me some money, I'll pay you some interest rate. That's all a bond is. So if we look at strategy and we look at, Saylor's used this analogy before, and he's talked about, like, Bitcoin is the petroleum and strategy is the refinery. And so if you understand this concept, it's like Bitcoin is like the pure source of it. And then you have strategy being the AKA refinery, because it takes Bitcoin and then it creates all these different financial products that people can invest in so that strategy can accumulate more money and then buy more Bitcoin. And that's really the simplicity of what this company is actually doing. All right. It's simple. So when you look at, we'll go here to, the Bitcoin refinery. It's like Bitcoin Petroleum. Strategy is the refinery. And then what has strategy done? They refine Bitcoin into these financial tools. And I'm going to get into what these tools are in a minute. What's STRIFE, what's Strike, what's equity, what's debt. How are they actually using it? And when you look at the suite of products that they have, the whole purpose of all these products for strategy is so they can get more money to buy more Bitcoin. That's the game. Simple. Okay. Buy more Bitcoin. As Bitcoin goes up, strategy stock price goes up. As the stock price goes up, they'll issue shares. They'll take that money that they get by issuing shares. They'll buy more Bitcoin. Okay. They buy more Bitcoin. Stock goes up again. They do the same thing, rinse and repeat, and they continue to buy more Bitcoin. That's as simple as it is. And they use different financial products to do it. And based on how the market's doing in any given time, Saylor and his company, I'm sure, make decisions. Which tool are we going to use right now? They're coming out with STRIFE, $2.1 billion that they're putting in the marketplace in terms of preferred stock. And they're going to use that $2.1 billion to buy more Bitcoin. Okay. They just came out and they bought Bitcoin recently. They issued common shares. They did a little bit of Strike and they bought more Bitcoin. All these financial products are designed to buy more Bitcoin. Simple, 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 simple. Okay. That's what it is. That's what the company's doing. All right. So we look at the company, traditional finance they're using cash to buy Bitcoin. They're issuing shares to buy Bitcoin, bonds to buy Bitcoin. It's all to buy Bitcoin. And that's why they now own 2.7% of the supply. And that's the company that I own. Okay. I don't know about everybody else, but I own stock in this company. Okay. So let's break it down. Let's get into like, what are these different instruments? Because I think it's important to understand when you hear in the marketplace, oh, Strategy's doing convertible notes. Well, what the hell is a convertible note? Strategy's doing STRIFE. What the hell is STRIFE? Like, let's get in and break this down into a very, very simple concept of what they are. So first, I'm going to give you the high level, and then I'm going to break down which each one is. So STRIFE is just a fixed income style, like income stream. Okay, fixed income stream. Strike is a little bit of a hybrid product where you get a fixed income and then you get the upside potentially of the stock if you convert. Convertible notes, they're bonds, all right, with an option to convert into stock later. And then MicroStrategy shares, it's simply Bitcoin exposure through equity, right? You just literally, they issue more shares, like they issue more slices of the pie. It's like a pizza pie. Those are the shares. They issue more shares and they take that to buy Bitcoin. So they're taking traditional financial products and they're redesigning them for this Bitcoin era. Now, Larry Fink, before I get into the products, let's not forget, he was a skeptic. Now he calls Bitcoin an international asset. And he says, we're democratizing Bitcoin. Now, clearly, he has a vested interest to say this now, as does Saylor, as does anybody who owns Bitcoin. As do I, because I own Bitcoin and I own strategy. So, of course, I'm going to give you some objective point of views, but I'm also going to be subjective because I believe in it, right? So, but that's what Fink was saying years ago. He was the opposite. He was a skeptic, and now he's come around and they've turned the corner. And now look at iBit; they're buying the hell out of Bitcoin. So let's not forget where people were and where we came. Let's not forget that Saylor was ahead of the game before the ETFs ever came out. Before they ever came out, Saylor was in the game well before that. All right, so he made Bitcoin investable for governments, for pensions, for Wall Street. He truly did. And that's the game that we're playing. And let's not forget, before I get into these financial products, let's not forget when strategies added to the S&P 500 index, which they will be, when their next earnings report comes out, who knows? They could have like they're going to have billions and billions and billions of dollars of gains when their next earnings report comes out. So that will then qualify them for the S&P 500. The vote needs to take place. Then they'll get into being a company that's now inside the S&P 500, and there will be billions and billions of dollars of passive income just flowing into strategy. So now when you look at the future, you don't just have financial products like convertible notes that I'm going to get to in a minute, or STRIFE or Strike. You now have the S&P 500 index and all the different index funds that are out there that mirror the top 500 companies in the world. And now you have money that's going to be going into these indexes of people that have never, ever heard of strategy. Never heard of strategy, but they park their money into the S&P 500 because they want to get 12 to 14% over 10-year periods. They park their money there, and automatically they're buying strategy and indirectly buying Bitcoin, and they don't even know it. All right? So this is coming around the corner, my friends. They will be added to the S&P 500 is my prediction. Rationally and logically, there's no way it can happen from my point of view. And then you have another passive income stream coming into strategy. So not just the financial products that freaking Saylor's created and his company, but now you have the S&P, the most kind of stable, trusted thing that people have in their 401k plans and their retirement funds and all that people trust, and they're going to be buying strategy. All right? Wild, right? Wild. Think about this. Wild. Like people that it's too risky. I don't want to touch strategy. I don't Bitcoin. They'll be buying it. They won't even be knowing that they're buying it. Okay? This is where the world's going. Strap on, get on board. This is where the world's going, okay? So we've got that. So let's get into what we're looking at right now with talking about the convertible notes and basically like what are the tools that they use, okay? Now, we know that in the beginning they use their own cash. They put it into Bitcoin. That's explained, okay? So the convertible debt, when you look at it, like this is like a type of bond, and it's a way that companies borrow money. So a bond is like this simply. It's like loan me $100 and I'll pay you interest. Okay. Then I'll pay you back. That's how it goes. Loan me $100, get the loan. I take your money. I'll pay you interest, and then I pay you back. But a convertible bond adds a twist. All right. So now when we get into convertible bonds, this is what strategy is doing. A convertible bond is different. It's like, okay, you loan me money, but at a certain point, if our stock goes up, okay, if our stock strategy, when they do this, the convertible notes, they go, if our stock goes up, you can trade your bond in for shares at a discount. And that's the concept of convertible bonds or convertible notes with what strategy is doing. Make sense? So yes, they are effectively having people borrow, institutions lend them money. So let's say strategy says, I'm going to do $1 billion of convertible bonds. Strategy gets the $1 billion. Their intention with the $1 billion of convertible bonds, meaning they get the $1 billion and then they give a note back to this person and says, I owe you, or this institution. They say, I owe you this $1 billion. Strategy takes the $1 billion and they buy Bitcoin. Now, the uniqueness of strategy's play and what they're actually doing is when they get the $1 billion, typically when you buy a bond out in the marketplace, like you will pay interest. So strategy would be like, hey, I borrow the $1 billion, I'll pay you a bunch of interest. And typical bonds might be 4% interest, corporate bonds might be 5% interest, but this is a different kind of bond. Strategy saying, no, we'll take your money, but in most cases, we'll give you 0 interest. Okay? 0 interest. And so they're not paying any interest on the money they borrowed. So you're like, why on God's green earth would an institution give them $1 billion and receive no interest for it? That's not how bonds typically work. And the reason being is because when you look at traditional bonds in the marketplace that are paying 4 to 5%, and the world's waking up and institutions are waking up, and institutions are like, hey, if inflation is 2 to 3%, if we're printing 6.5% more money every year in the economy, then if I'm making 4 to 5% on a traditional bond, I'm not really making money. And if you look at the rule of 72 of how long it would take at 4% interest for your bond to double, it would take about 18 years for your bond to double, right? 4 into 72, you divide 4 into 72, 18 years. So if I give you $1 billion in a traditional bond market, and I'm like, all right, $1 billion, you give me 4%, I got to wait 18 years for my bond, for the value of my money to double. But if you factor in inflation and the printing of money, the actual ROI, not the apparent ROI of what my bond is going to be worth in the future, not the apparency, but the actual, when you take into place currency debasement and you take in place inflation, it's a negative return. It's a negative return. So now you wonder, like, why would companies and institutions take this risk in a company like Strategy? And why would they actually go, hey, we want a new kind of bond? And why is Saylor touting that there's like a $300 trillion bond market, or fixed income market, I should say, $300 trillion, and he wants a piece of it? Because the people in the fixed income market that are getting 4 or 5% are like, this ain't working anymore, dude. We are in a crashing economy. The U.S. is in crazy freaking debt. I think our debt interest payments are like $1 billion a day. It's sick. So the world's waking up. Institutions are waking up. They're going, 4 to 5% ain't going to cut it anymore. So they're now investing in convertible notes. Some of these institutions with Strategy, Strategy's like, we'll give you 0 interest, 0. Why would they do that? Well, here's the thing. The institution loaning the money to Strategy, that loans the money to Strategy, if Strategy fails or gets screwed up or nothing works in the future, they'll get their $1 billion back. And in fact, they're at the top of the food chain. So it goes convertible bonds, preferred stock, and then below that, common shareholders. So if Strategy goes tits up or belly up, like the common shareholders, we're screwed, right? But as you watched earlier on in my video, the likelihood of that happening with this company that's not over leveraged, that owns 2.7% of the supply of Bitcoin, it's very unlikely, in my opinion. All right, I'm just one guy giving you my viewpoint, right? So the worst for these companies, convertible bonds, because they're at the top of the food chain, they'll get reimbursed first. If something bad happens to Strategy, you'll get their $1 billion back. But the best that can happen is it's called a convertible bond, because they can convert it into stock at a future price. Make sense? And that's what a convertible bond is, period. Simple. And this is one of the ways that they use leverage to actually buy more Bitcoin. So everything I'm about to share about Strategy's instruments is simple. They use these instruments to buy more Bitcoin. That's what the company does. All right. Now, you have issuing shares. We all know what this is, but this is kind of a debatable topic, which isn't really debatable in my viewpoint, because what they're doing is brilliant. But a lot of times people look at issuing shares, and it kind of means, like, if you put it in simple terms, it doesn't kind of mean they're selling pieces of the company in exchange for cash. So they issue shares and people pay for it. Makes sense. So when we go buy, stock in the marketplace, and I go buy some MSTR, I'm buying shares, and it's from shares that the company issued. Simple, right? And I pay them money. They take that money. They buy Bitcoin. Think of it like slicing a pizza into more slices. You got a pizza, you're slicing into more slices. All right. So when they do that, that's called dilution, right? It dilutes it. So oftentimes you see this in the marketplace, and many, many companies do this. Like, you'll see companies issuing shares. Apple does it. Google does it. They issue shares in the marketplace. And it dilutes the company stock. Now, the idea is that when companies are doing this, let's take a look at Strategy in particular. If you use something with that money, right, you're issuing shares, you're diluting. If you use the money to buy something that grows faster than the dilution, like Bitcoin, it can actually make each share worth more. All right, so this is an important point to just go over, because they issue shares and people are like, oh, they're diluting it. They're diluting it again. And Saylor said it over and over again. His goal is to get the shareholders more Bitcoin per share. So when he issues more shares or issues more pizza, metaphorically, in the marketplace, he wants to get you more Bitcoin toppings in those shares and increase your Bitcoin per share over time. That's the goal for the shareholders. All right. So Strategy raises money by selling shares. They use the funds to buy Bitcoin. Bitcoin rises, and the goal is for the value per share to go up, right? That's positive leverage versus a traditional company that you might look at. And a traditional company like Apple will go issue shares, and they might take that money and put it into research and development. They might invest in whatever they invest in to grow the company. And the time period that it takes for them to get back that money or a return on investment is not as immediate as it appears right now for Strategy. Strategy's doing this, and Bitcoin's going up. And as Bitcoin goes up and their stock goes up, they issue more shares, they take that additional money, and they buy Bitcoin. Okay. So that's what they're doing. And that's why you see the race as Bitcoin keeps going up. The shares keep going up. They keep doing this to get more Bitcoin per share for you. Make sense? So that is what's actually happening. That's the game. All right. That's what's happening with shares, period. STRIFE is like a Bitcoin backed bond. All right. So look at this product. It pays 10% annual yield. So when you look at this, again, this goes back to the fixed income conversation. Traditional bonds aren't going to cut it. All right. I'll say it again. Traditional bonds aren't going to cut it. So the marketplace, as traditional finance is falling apart, and let's face it, it's been falling apart for years, you know? Let's face it, right? If you look at every aspect of the industry and you look at certain areas, not all financial institutions are failing, but you look at certain areas, look at the disasters that have taken place over the years. I mean, look at what happened with the mortgage crisis back in 2008. That was a freaking disaster, guys. It was a train wreck, all right? And it was just criminal enterprise that was taking place there. And these banks and these companies got bailed out. So the marketplace is looking for a new financial world. Like, people are waking up, like retail investors like us are waking up. We're starting to see this train wreck of a financial system, this manipulation of a financial system. And yes, is strategy using leverage? Yeah, but they're using it in a positive way to buy a good financial asset, to buy a finite financial asset, to buy a scarce financial asset, to buy a digital financial asset, to buy a financial asset that is not controlled, that is decentralized, thank God. And yeah, will it be manipulated? Will it be leveraged? But the beauty of Bitcoin is we know the beauty of Bitcoin, okay? So now they have this product and they're like, hey, we want to attract new money into the marketplace. We want to attract new money. We can issue shares all day long, which they're doing. We can do convertible notes, but let's attract people who are looking for fixed income. So you'll have pension funds that are looking for this. You might have insurance companies looking for this, and they want to put money into fixed income vehicles, and they're weighing in and going, hey, this seems like a legit company. They own 2.7% of the supply. We'll buy STRIFE. And they do it. And we know there's demand in the marketplace because they got 2.1 billion coming out on this of STRIFE. And it's part of their plan to then go to different institutions and say, hey, buy STRIFE from us. And STRIFE is a preferred stock, okay? It's got the features of a bond, but it's actually a preferred stock, right? So when you go buy it, you're going to buy the stock, STRIFE. And it pays a 10% annual yield. And that's basically the way that it works, and it's paid out quarterly. And as I said, it says on the slide that it's safer. Is it safer? Strategy still has the apparency of being a risky company. Is there risk involved in it? Yes, but people who want to take a little bit of risk are coming to buy STRIFE, and that's what they're getting, and that is the game. So it's good news. Okay, so I like what they're doing here. I think it's pretty cool. And then what is yield? I'm just gonna tell people what is yield. You hear this term used all the time. It's just the income you get from an investment, usually as a percentage. So when you hear the term like 10% yield, if I go put $1 million into STRIFE, all right, then I'm going to get a 10% yield, which is I'm going to get 10% income off of the investment that I make. So if I put in $1 million, 10% is $100,000. Make sense? Okay. So that's how it works. Is there some fluctuation in STRIFE? Yes. If STRIFE trades below its target price. So when you look at STRIFE, if you go look it up, it has a price where you go buy into it at this. Now, if it trades below its target price, the income that you get off of it could go up. So if it's $100 and I buy it for $80, I'm going to get more than a 10% income stream. Right? If you have $80 and you divide it into, it's about 12.5%. If I buy STRIFE at $70, then I'm going to get a 14% income stream. Make sense? So it can fluctuate. It can vary. It is a preferred stock. So the point is, what does strategy do with that money? People are like, I want to buy STRIFE. I want to buy STRIFE. They take the money. They buy Bitcoin. Simple. Like, what they're doing is sometimes seems complex because of all these new products, but what they're doing is simple. They buy Bitcoin. That's their game. Okay. Now let's talk about Strike. You've heard Strike in the marketplace. What the heck is Strike? How is it different? Strike is like an income vehicle with a little bit of rocket fuel. So it is different than STRIFE, where STRIFE is designed to pay a 10% yield. You got Strike paying an 8% yield. And the difference with Strike is you have the option to convert into shares in the future. All right. If you run the math on all of these products, let's say I was even able to buy Strike or STRIFE, or if I went to go buy them, if you look at this in the marketplace, like holding common shares, if the stock goes up, outperforms Strike, outperforms convertible bonds, outperforms STRIFE by a large margin. All right. So, but the risk of holding common shares, it can go up a lot and it can go down a lot. And so these types of products are attractive to pension funds, institutional investors who want to put money in this, that want to get a higher yield or income stream, but also want to have some potential upside on it. Tracking? So it's kind of the best of both worlds. They get some income now and they get a little bit of growth later if they decide to convert into the stock. Okay? So somebody's saying down here, I think the drop is a combination of the latest tariff and frivolous lawsuit. Both effects on MSTR price are just temporary. I agree with you, Mike. I mean, there's news in the marketplace. Anytime you come and you get news in the marketplace of a lawsuit coming out on strategy, and I read and got a summary report of the lawsuit. I think it's frivolous. I think it's bullshit, to be quite honest. And I think some of the claims in there are kind of ridiculous. But people will come out as the giants rise. You get all the parasites who come out and start attacking them. So that's one thing. That news didn't help. I would definitely say that in terms of the price. To Mike's point down here, I'd also say that we did have news on the tariffs that came back in that we know affected the market with the European Union and Trump going to hit them with a 50% tariff. So that's affecting the markets a little bit right now. But overall, things are bullish for Bitcoin, and I think things are bullish for strategy. Okay. And we're going to get into a little bit of the technical analysis in just a moment when I finish this up. Like, where is strategy now? The fact that they dropped to 366, what does that mean for them? Okay. And I'm not a technical guru. Do I look at the charts? Do I analyze the charts? Yes. Do I have graphs and things that I look at? But I do a little bit of research on it. I see what some analysts are saying in the marketplace, and I'll give you some data and I'll tell you some of the different sources on this. Okay. So great. So that's Strike, the simplicity of what Strike is. Let's get into just a performance snapshot. Again, the purpose of this video is to reinstill the stable idea that strategy is an incredible kick-ass fucking company. All right. And yes, their stock is volatile. Yes, you need to do your own financial research and make your own decisions on this. And depending on when anybody bought in on this, if I look at when I bought in on this, I have a different viewpoint than if somebody bought in much later. Okay. So, but depending either way, whenever I bought in, to me, is important, but it's also looking at the fundamentals of what have I invested in. And that's the whole purpose of why I'm sharing this video. So if you go back to 2024 and we look at 2024, strategy did about 321%. Bitcoin did 156. I think this is actually wrong. I think Bitcoin was more like 120 in 2024. And strategy was approximately 321, maybe a little bit higher. Okay. So strategy outperformed Bitcoin. And why is one of the reasons that people actually buy strategy? Why would I buy strategy versus just buying Bitcoin? Is a question that people have. This is one of the reasons. I'm looking for a higher upside. Now, I own both. I own Bitcoin and I own strategy, but I am looking for a higher upside. And with that, I take on the risk and I take on the responsibility that can go up or it can go down. And that's it. If you look at the S&P 500, 24% in 2024. That's typically much higher, for the S&P, than it typically does over a 5 or 10 year period. It typically does about a 14% return, sometimes maybe like 12%, depending on the decade you look at. But, so it's typically higher, and they have gold at 13%, and then you have bonds, 4%. But inflation eats its value. So you look at this and you go, great. So like kind of here's kind of the options in the marketplace. Yeah, there's more. You could go buy Apple stock. You go buy Tesla, things like that. But here's kind of the comparison to look at and zoom out and go, let's take a breather rather than looking at 1 or 2 weeks of, oh my God, strategy stock's going down. Let's take a breather. Let's zoom out. Okay, where were we at in 2024? 2025 is not over. It's May. Got a whole 6-7 months left, And then you have this stock, a strategy in Bitcoin for another 4 years, 5 years, 10 years, 20 years, 50 years, who knows, maybe 100 years. So that's the performance snapshot. And you compare and stack up strategy to every major company and every asset on earth, and it outperforms NVIDIA, it outperforms Bitcoin over the last, from 2020 to 2025. It beats NVIDIA, it beats Bitcoin, it beats Apple, it beats Tesla, it beats all of them. Okay, so that's the long-term snapshot of this company. Rule of 72, important to look at this when you're looking at your investment decisions. Like, what's the potential for my assets over a 5-year period, 10-year period? Simple. So we all know that, if you haven't done this before, like rule 72 is simple. Like if I make 4% on bonds, I just divide that 4% into 72, and it'll tell you or tell me or you that it takes 18 years for bonds to double in value. So if I have $10,000 in bonds, it's going to take 18 years for my bonds to be worth $20,000 bucks. I don't know, man. I wouldn't buy a bond like if my, wow, Jesus, 4%, crazy, right? So we got 4% on bonds. Then you have STRIFE, which is one of Strategy's fixed income products. If one was to buy STRIFE by the rule of 72, you take 10%, you divide it into 72, and you get 7.2 years. So if you're looking at this and you're like an institution or a pension, a pension fund, or you're a insurance company, and you're like, hey, those bonds that are giving me 4%, I'm going to double my capital in 18 years, or I could buy STRIFE and double it in 7.2 years. This is why institutions are jumping in. And this is one of the reasons why Strategy is going to pick up a big percentage of the fixed income market. Big percentage. I mean, 0.1% would be a huge, huge freaking windfall. All right. So that's STRIFE. And then Bitcoin. If you look at Bitcoin's average, now this is not 29% average. Bitcoin's average over 4 years is higher. Its average over 8 years is higher. But one of Saylor's predictions is that if in 2045 we may have a $13 million Bitcoin. So you've heard him posting on X, and he says that for every Bitcoin you don't own right now, it costs you $13 million 20 years from now, because Bitcoin is approximately $100,000 when he was posting this. Now it's $1.08. So for every Bitcoin you don't own now, or you don't buy, or you sell, it costs you $13 million. If Bitcoin goes to 13 million in 20 years, if you do the math and you project it out and you look at Bitcoin being 13 million in 20 years by the year 2045, it's about a 29% return, depending on what Bitcoin's price is at that moment. Okay. So in that case, your money would double every 2.5 years. See that? It's pretty badass, right? When you think about that, that's 29%. Now, do you think Bitcoin will go up more than 29% a year over the next 4 years? We look at what Bitcoin's done, over this last year. Yeah, it's gone up by more, but you got to factor it out over 4-year periods. Let's not forget that Bitcoin, and actually I'm going to go back to this for those of you who are just joining us. Let's go back to this, because let's not forget, you put the disclaimers on this stuff and go, let's look at the, let me remove this, and let's look at what I shared at the beginning of the show, which is this. Okay, because let's not forget how Bitcoin moves. All right, and so that's important as well. If Bitcoin moves this volatile, what do you think is going to happen to Strategy? So Strategy, in my prediction, will go way up, and then it will go way down. Okay, so, and we've seen this happen multiple times through 2024, 2025. But this is the peak of the Bitcoin cycles. If you look at the recent bull runs back in 2020, 2021, at a level of 7 here, this is where Bitcoin overheats. And so you saw the spike up and then the spike down. And then you look here back in 2017, 2018, if you remember that, the spike was like way up to 20,000 and then way down back to 3,000. In 2018, when it dropped to 3,000 is when I bought my first Bitcoin. It was actually kind of funny. I was sitting at the table in skiing in Park City with or Whistler with some of my friends, and we're sitting at the table, and it's when I first learned of Bitcoin was 2017. And that's when it was like trending, going way the hell up. And we were trying to get in at like 13 or 14,000, and my phone was jammed and I couldn't buy into the damn thing. I'm like, God, I'm trying to buy this thing. I'm trying to buy and everybody at the table's buying it at like, I think they were buying it at like 16 or 17,000. And I couldn't get my account working. I couldn't buy in, and my phone's jammed. It's not working. Everybody buys Bitcoin. I don't. And then Bitcoin crashes. I forget about it. Bitcoin crashes. And then I pick up my first Bitcoin at $3,000. I'm like, well, if this thing was up at 18,000, it's got to go back up again. So I started buying Bitcoin at 3. All right. So when you look at this crash, here's the crash where it goes up and then it drops like crazy. And then you go back to 2014, same thing. It spikes up, drops, spikes up, drops during that time period. But you look at the spikes and the drops, and the big question people have right now is like, are we done with the spikes and the drops? Because Bitcoin's becoming mainstream, institutions are coming in, governments are coming in, sailors leading the movement, ETFs are there. We're still in the volatile phase, my personal point of view. All right. Will we have a run up and a run back down? Yes. And who knows what that support level is going to be when at the end of 2025 or 2026, my personal prediction, we will have a drop back down. How low will Bitcoin go? That's the question, right? We know in the past, like in 2020, when it ran up 69,000 back down to 15,000. In 2017, 18, 20,000 back down to 3. I mean, I lived through these things. So, like, don't get fooled that this won't happen again. That's the disclaimer on it, right? Don't get fooled that it won't happen again, right? Nothing's going to go up forever, all right? And without momentary dips at least. So if that happens with Bitcoin, what could happen with strategy? And this is the full disclaimer, the full risk of this stock, and you got to be prepared for it. And if one is new to investing, they're probably not looking at Bitcoin. If one's been investing for a little bit, they need to understand Bitcoin. If one's been in Bitcoin for a while, then they need to understand strategy from my point of view. If one doesn't understand Bitcoin, they're not going to understand strategy. Okay? They'll have too many misunderstood words, and then all of a sudden they'll get upset and they'll start cursing and yelling at Bitcoin and strategy, and they'll leave and they'll get out of it. Or they'll sell and they'll be upset at some point that they sold maybe at the wrong time. So there you go. All right. So that's what we're looking at. Now, I went through this at the beginning of the show. I'm just going to do it one more time. Then we'll go into strategies kind of support level right now and what some analysts are saying of where we're at right now. So again, look at the yellow line now. It's a 2.7, guys. That's the yellow line. All the way to the far right, we're at 2.7. We are not overheated right now per this chart. We're not overheated with Bitcoin. We're not. So are we at a peak? I don't think we're at a peak at all right now. How much higher can it go? Don't know. Do I think it could hit 200? Yeah. Do I think it could peak out at 140, 150? Possible. We'll see. But we're not overheated because in the times where we were overheated in the bull runs, it's above the 7 marker here. These yellow lines spike above 7. As it starts to rise there, then people are interested in taking profits. If I was interested in taking profits at Bitcoin, I might look at selling at that point. Make sense? For most of my Bitcoin, I think I'm just holding for the long term. Okay. So that's but strategy, I have a different viewpoint. All right. So there you go. So there's that, right? So let's get back to what we were talking about, and let's remove this and let's go back to where we were. So now you look at this and you go, okay, over every 4-year period, if Saylor's right, over the next 20 years, Bitcoin may average 29% over the next 20 years, and then your money would double every 2.5 years. So you can look at this. If I have 10,000, 2.5 years from now, it doubles to 20,000. 2.5 years from then, that means 5 years, it's at 40,000. Then 2.5 years from then, 7.5 years, it's 80,000. Then 2.5 years from then, which is 10 years, it's 160,000. Then 2.5 years from then, which is 12.5 years, it's 320,000. Right? Then 2.5 years from then, which is 15 years, it's where we're at. I think we're at 360 or 320, whatever. So then it might be 720. Then it goes to $1.5 million. So you take 10,000 over that 20-year period, and that is some serious dough. So for those of you who are looking at it right now, and you're like looking at your future, like what could $10,000 be worth in Bitcoin? There you go. Somebody at 40 years old could be looking at retirement and like, hell, man, that's one hell of a deal, man. Not financial advice, just saying. Could be a winner. And then the question is, am I too late? Like 10,000. What could that be worth right now? And if you're looking at like, I wish I had more Bitcoin, I wish I had more Bitcoin, and you're at 10,000 bucks in Bitcoin, good on you, man. Huge acknowledgement to you. If you're at 5,000, that huge acknowledgement. Look at what that could be for your future, for your family, for your goals and dreams. Huge acknowledgement to you. Huge. Doesn't matter how much you have, you got what you got. Good freaking job. Huge. So now you zoom out and you look at the future of this possibility and you're like, damn, this is some good stuff. Or you could put your money in bonds. And I was watching James from Invest Answers earlier. James, brilliant, freaking love the guy. Damn genius he is. And he was talking about the number of baby boomers. I think the fastest growing segment of the population in terms of baby boomers in Australia is baby boomers that are interested in Bitcoin. The baby boomer population is buying up Bitcoin in Australia. Huge, right? Dude, this is mainstream, man. It's going. And, you know, your neighbor, Joey, who's asleep at the wheel, who doesn't even know what Bitcoin is and still telling you it's garbage and it's going to go to zero, Joey needs to wake up. All right? Sally that you go to with at work who's like, oh, that's the biggest hoax or it's too expensive at $100,000. Sally needs to take the blinders off, man. All right? You know, and your uncle at the freaking Thanksgiving parties or whatever holidays coming up, July 4th or Memorial Day weekend, you're sitting there and the uncle's like, oh, why you buy that crap, man? Your uncle needs to stop drinking the beer and start drinking the Kool-Aid, man. You know what I'm saying? All right? Because fundamentally, this is the most sound financial asset, meaning Bitcoin, on the face of planet Earth, period. End of story, end of story, end of story. It is. That's it. And Strategy's first to the party. Nobody's going to catch them, man. No other company's going to catch them. All these other companies that are trying to catch up, they're playing for second place. CEP, ASST, or whatever it is, Metaplan, it's not even close. They're not even in the same universe, all right? Strategy's universe is over here, and the rest of you are paying rent, all right? Now, I wouldn't mind paying your rent because you guys are raising a shitload of money to buy Bitcoin, but Strategy's the dominant player. Strategy's got a monopoly on the marketplace. Let's face it, they do. All right? So, is one in good position despite what's happening right now based on everything I shared in today's presentation, which is understand the fundamentals, understand the fundamentals, understand the fundamentals. That's where conviction comes from, even in tough times. And as we were going through a shitstorm over the last 2 months with the tariffs and it was dropping all the way down, I did not sell my Strategy stock. No, I didn't. Okay? So that's what the game is right now. Yes, the NAV premium. Many people are talking right now of the NAV premium. That's the net asset value of Bitcoin, and it trades at a premium. So Strategy has its net asset value, its Bitcoin, whatever that value is on the balance sheet, and then their stock trades to a premium at it. So when their stock trades at 2x to their net asset value, that's what the NAV premium is. Right now, the stock is trading, the NAV premium is at like a 1.6 or something right now. For Strategy, is super low. So if you're wondering what NAV premium, that's what it is. Net asset value, premium, higher. Value of the Bitcoin, people pay more for the stock. That's what it is. We like when it's a 2. We like when it's a 3. Remember back in 2024 when it was at 4, man? Who was holding Strategy when it was up at 4? I was. Who was holding? Put it in the chat box. Anybody here was holding Strategy when the NAV premium was at 4? Anybody? Yeah, I was. Okay. That ride was freaking amazing. You know, after hours when Strategy went to 540, man, that was the best ride ever. Talk about a high, man. Shit. I hope we hit that again for everybody's sake. Okay. So there you go. That's what's going on. You can take a look at it. Bitcoin is digital property. Larry Fink says we're democratizing Bitcoin. You had Buffett, Munger, and Gates calling it rat poison years ago. Now the ETFs have approved it. Look how the world's changed, right? You know? And you know, I acknowledge like Warren Buffett for being just one of the greatest investors of all time. Like literally. I mean, nobody's accomplished what that guy's accomplished. He's genius. He's amazing. And you know, he's retiring. It's his dawn his era is over. It was a great run. There's a new sheriff in town. His name's Michael Saylor. Period. New sheriff in town, my friends. New sheriff in town. Okay. So that's what's going on in the game. ETFs, we know what these are. Obviously, this is great because ETFs are letting anyone buy Bitcoin now through 401k plans, retirement funds, S&P 500, top 500 US companies. As I shared earlier, strategy will likely be added to the S&P 500, which is huge. Passive income flowing into strategy. And then all your friends, Aunt Sally, Uncle Jimmy, Bobby next door, the people poo-pooing it at the freaking barbecues, the ones invalidating your choices will go, that Bitcoin's crap, that strategy's crap. And then 5 or 6 months from now, when they get on the S&P 500, and you'll go, hey, do you own the S&P 500? They'll be like, yeah, hey, you own strategy now. That's going to be the greatest freaking trick you'll ever play on your friends who don't believe in strategy and Bitcoin, man. I can't wait for that moment when you get to say, thumbs up for you, pal, right? Okay, we went through the blueprint here. We talked about, here's the things we talked about today. If you're just joining us, went through all the different financial products that strategy has. We got STRIFE, we got Strike, we got convertible bonds, we got issuing shares, we got strategy eventually being added to the S&P 500, although it's not their financial product. It's a way for automatic money to come into strategy. I don't think one is too late, but the window, is closing. Every time more institutions get in, every time more governments get in, the window's closing for this, okay? So that's the story. Now, what's going on with strategy? They closed at 367 on Friday. People are like, holy cow, this is weird, man. We got the Bitcoin price going up. We got strategy moving in a reverse direction. Like, what the hell is going on? Not cool. So here's some support levels for what it's worth. Take it with a grain of salt. The one thing that I look at is I'm standing with my conviction and my knowledge of Bitcoin and strategy, and that's where I make my decisions the most. And then, of course, I'm looking at data because I'd be stupid not to look at data to make decisions as well, to add to my knowing, my conviction, and back it by data. So the support level is around 360, 365. This is a zone that shows repeated bounce behavior, okay? There's still a bullish pattern with strategy, okay? So when you look at the 50-day moving average, it's still showing a bullish pattern for strategy. And that's the basic gist of what one can look at. When you look at the relative strength index for strategy, when you look like at 70, if it's at 70, it means that it's overbought and it's overheated. When you look at 30, it means it's oversold. And so strategy is right at 44 with the relative strength index, which tells us that it's right in the middle. It's not overbought, and it's also not oversold. It's right in the middle. So when you look at those two things, it's got support levels. It's got the relative strength index is looking good. The pattern for it looks like it's per some of these analysts, looks like it's still in a bullish pattern. And so do we have to be worried about strategy in the long term over the next 6 to 7 months? I don't think so. May it drop lower over the next week to 2 weeks? Yeah, it's totally possible. Totally possible. Could it go up? Yeah, totally possible. So I don't have a crystal ball for what's going to happen in the next week, 2 weeks, 3 weeks, a month. I don't know. What I do think is going to happen is that in the next 6 to 7 months, we're going higher. Okay. So that's what I think. Yes, somebody's saying Mike, George, Ted, JLD. Yeah, JLD is great. I had JLD on the show like a month and a half ago. He's fantastic. I don't know of all these other people, this other person, but sounds cool. I'll check it out. Okay. So that is the basic on what's going on. If you just joining us, go back and watch the show. If you want the evolution of strategy, if you want kind of the stability of strategy, if you want to understand what they're doing, this is a great show to get reconvicted and also get one's knowledge base up for what's happening with this stock to understand it. It's why I'm convicted in it, because I look at the fundamentals, I look at the data, I look at the largest freaking company on planet Earth in terms of holding Bitcoin with 2.7% of the supply. And they are becoming a dominant force, not just in owning Bitcoin, they are a dominant force in terms of the financial world now. And they are reinventing the financial world. And Saylor is our fearless leader kicking ass. I've never seen anybody more convicted on this planet in the financial space than this guy. And I have strength and confidence in that leadership to know that he's going to stick to his strategy, pun intended, and he's going to continue to buy Bitcoin, and he's not going to stop. And so I think the future's bright. Let's see what happens in the future. Ricardo says CEP to the moon. That's another Bitcoin treasury company where they have Bitcoin on their balance sheet. Lots of Bitcoin treasury companies coming out right now, which is good. And it's a cool thing. I was watching MSTR, True North, another great group the other day. I think Jeff Walton's one of the leads of that. And they were talking about, somebody on that channel had said that when competition comes into the marketplace, for strategy, it's good competition because more people buy Bitcoin and everybody wins. And when you really think about it, this is the game where everybody wins. More companies come in, they buy Bitcoin. It's good for strategy, right? The Bitcoin price goes up. So Strategy's been giving away their playbook and saying, hey, take the playbook. Here's our playbook. Do it. Do it, do it, do it. All right. If you like this show, go ahead and give me a little like down below. I never asked for this stuff in the beginning of the show. I probably should ask for this to get more likes and subscribers and stuff. But definitely put some like down below. Subscribe to the channel if you're not. Put some comments down below. I do stream this on different platforms, so you know. So when I end the stream, which would be very helpful if you can put some comments down below the YouTube. We do try and clean up the spammers and the scammers because there's a bunch of them who jump on. So if you could leave some good comments, it would really help us and help the show and get more people subscribed. You guys are awesome. Happy Memorial Day, TC to you. Ricardo, happy Memorial Day. Fred, happy Memorial Day. Robert, happy Memorial Day. Everybody in the thread right now. Grant, you too. Mike, you too. Michael, you too. Everybody's there. And let's have some fun. And I hope this served you today. Have a great weekend with your family and stay well.